out and take a look at the local market to see what he's watching. We're joined by James Gerrish from Shaw and Partners and Author Market Matters. James, a very good morning to you. Interesting session we saw on global markets overnight, of course, because we had the positives just as far as the signs of easing inflation in the States, but then, of course, the further geopolitical developments with missiles hitting Poland.
Yeah, a few swings and roundabouts, which has become pretty much the norm over in the US and our market as well, Andrew. So, I think the main takeout, as the prior guest made mention of, is just the PPI number, which is effectively wholesale prices. So that was weaker than or softer than expected at 8% versus 8.3. Another sign that interest rates have peaked, and I'm well and truly in that camp. So, US bond yields were down overnight, US dollar was down overnight, and that put some heat under the commodity complex and a few other rate sensitive areas like technology stocks. So I'm a little bit more optimistic than the prior guest there, Andrew.
All right, well that's good to know. All right, so what are we watching locally just as far as results are concerned? We've had Aristocrat Leisure out. What have you seen there?
Yeah, it looked like this is their full year result. So revenue was about a 1% beat to consensus expectations. Net profit was pretty much smack in line. So net profit for the year was 1.1 billion. Their dividend of 52 cents for the full year was slightly shy of the 56 expected, but you hold this stock for growth. In terms of their guidance, they've come out and said that they expect FY23 to show growth. Just in terms of where the market's at that for FY23, the market's looking for growth of 13% at the profit line. So I haven't been on the call or looked through the presentation in detail yet, but overall it looks like an inline result, and a little bit more detail around guidance would be good.
All right. CBA yesterday, what did you make of its numbers there to the end of September? 9% a lift in operating income, 2% in cash earnings.
Yeah, I thought it was actually a good result. I mean, it was a trading update, so quarterly, so there's not as much detail as you would in more meaningful time periods. But growth was good. I think they don't provide net interest margin for the quarter, but you can make an assessment around margins. And they looked quite positive. They actually looked sector leading in terms of their margins, which you expect from the best bank in the sector trading at a massive premium to peers. So I thought it was a good result. Just looking at what brokers are doing this morning, universally downgrading the stock. I think there's about 3 or 4 brokers out there with downgrades this morning, which is not, that generally happens with CBA. There's a lot of negativity from a valuation standpoint towards CBA. So of the 15 brokers domestically that cover it, none of them have a buy on it. So I think there's about 10 holds and about 5 sells on the stock. So it's obviously expensive, but it's expensive for a reason, Andrew.
So James, what's your broader view on financials at the moment? What are your preferred stocks?
Yeah, I think they obviously, financial sector was the best performer in October. So, I wouldn't be surprised to see a bit of consolidation in the space at the moment. It was the best performer, for a number of reasons, but we started to see that margin expansion come through, and margin expansion as a result of, of higher interest rates. So they don't pass on the higher rates to depositors as quickly as they pass it on to borrowers, and that helps to expand their margins, and that's what we saw play out. So the fact that bond yields have probably peaked or near a peak, I think that's probably in the short term. I think we'll see some consolidation in the financial space. So we have CBA in portfolios. NAB obviously reported WENX dividend yesterday. We're underweight banks now in the portfolios just in the short term.
James, let's move to energy. Coal prices have been under pressure recently, although I think they did actually lift overnight. But as a result, we've seen those coal stocks locally also their share prices falling. So how do you see this, particularly looking ahead?
Yeah, you're right. They were up last night. So Newcastle coal futures were up about 6% last night, but taking a step back. So, the active contract for Newcastle coal futures is down about 35% from its highs, from high to low. It rallied last night, which provided a bit of support for them. But if you think about, the, the higher temperatures that we've had in Northern Hemisphere winter, that's sort of played into it. But I think this is now representing a reasonable buying opportunity in the likes of Whitehaven, etc. So we got an update of their buyback recently. Their buyback is going, they're buying back a lot of stock. They're going to buy 25% of their register back over the next 12 months. That's really supportive. Coal prices, like any commodity, they ebb and flow. They've pulled back 30%. They're now up 6% from their they were yesterday. So expect a more positive session in terms of the coal stocks in the market today, Andrew, and I think that's probably the start of more to come.
James, is just taking a look at among the biggest movers yesterday with those lithium stocks, for I guess a couple of different reasons. Certainly saw some re-ratings there, or was it also a significant profit taking, do you think?
Well, I think what you may mention, there's a few different reasons. So obviously lithium prices came under a bit of pressure. There's reports around reduced demand coming out of China. I think you've got a crowded trade. If you look at the Bank of America investor survey last month, ESG assets were up there as one of the most crowded long trades out there, along with the US dollar. We've seen what played out with the US dollar in the last couple of weeks. So I think that the crowded nature of the trade has played into that as well. Interesting to see the lithium ETF over in the US overnight was only down about 1.5%. So obviously we had a big decline yesterday with the likes of Pilbara down nearly 9%. So I wouldn't be surprised to see a little bit of recovery in the lithium names today based on what we saw play out in the US overnight.
All right. And James, interested to get your view on perhaps those local stocks exposed to China, given we have seen supposedly a thawing of relations, if you like, between, given the talks we've had between Anthony Albanese and Xi Jinping. Are you expecting any sort of movement in that regard?
Yeah, I mean, I look at some of the, we've had an international equities portfolio. We don't have a lot of exposure to China, but Alibaba's been one we've held, and it's been a really poor performer for us. So, I was looking at that overnight. That was up 10 odd %. Companies that are exposed to China are starting to rally on a global context. So that should be a positive for our locally listed ones as well. Obviously the way to play that's through commodities. So we're bullish on the commodities, but I think the biggest influence of commodities is probably not the relations between Australia and China at the moment. It's what's happening in the US dollar. That's been the biggest impediment to it. So to me, commodities, we're very overweight that space in our portfolios at the moment. I think it's a trade worth backing. I'd say we're a little bit more cautious on the ESG focused commodities, so the ones that have been running hot. But those areas, so energy, Whitehaven coal, we added back into the portfolio yesterday on weakness. That's one I'd be keen on at the moment. Obviously the big guys, but copper as well is one that we're bullish on. So we've got Sandfire in the portfolio, as well as Oz Minerals, which is obviously under takeover. And I'd be expecting a higher bid from BHP to come through for Oz Minerals.